kind of also part of that as well. So basically you can see like daily volumes greater than open interest and large position of open interest, and then you'll have the flow algo score. So if I'm looking at these, and what I want to do is kind of decide like what's going to be a good trade and what's going to be a bad trade. And what I like to do is I like to filter by the premium, because my logic is if somebody's going to be putting a lot of money behind a position, they're probably going to want to be right, and they've probably done their research, especially with options. Options can be a lot more risky than equities. So the people placing these option trades are typically going to be more educated than I think the normal person. So what I will do here is I will sort by premium. So I kind of want to see what the highest premium is for the day. And what's this? You need recording rights.
You're okay. You're okay. Jay is doing it. It's all good.
Yeah, so what I'll do is I'll sort by the premium, because I want to look at this first, because I don't want to see, anything that's, in the 20s and all down here, because usually what I see that as is, it could really be anybody. You don't really know who's going to be placing these type of orders. It's just a lot of noise. So for me, what I like to look at is the premium, right? So you have Tesla for 24 million, Netflix for 9 million. And what I will do is I will almost ignore the SPYs and other ETFs, because they could be hedges, and there's just no point in trying to decide whether it's a hedge or not, because you'll never know. So if I'm going to look at something, I'm also going to look at the expiration too. I want to see when they think this can happen. So if they buy it, just say today, for example, or yesterday, and you want to see when they think that move can happen. So they have this for December expiration. So if you're going to follow this trade, you can't skimp on your expiration, because you don't know when they expect this move to happen or how much they're expecting to get out of it. So for example, like if you look at DocuSign, you'll see that there's 5 days until expiration here. So if they have about 2 weeks out, and I've seen most of the options are going to be about 2 weeks out. I mean, very few of these orders are actually weekly options, just because it's just way more risk. And I think that's where the decision-making process is, more educated on the smart money side, and people that have money, is because if they're going to spend this much money, they're going to want to get a farther out expiration. And also it gives you more time to be right. So if they think a move's going to happen, they want to try to maximize those profits, or they're going to want to try to at least be in the money or at the money by expiration. So another thing too is, if you notice the strike prices, usually they're around or at the money, maybe a few strikes out. And you want to look at these, you want to be careful of these out of the monies, because out of the money strikes is either they know something, and if the expiration is pretty far, you can search by unusual. So what unusual will show you is stocks that are far out of the money with a closer expiration. So you can see, the spot here is 27, the strike's 40, and it's expiring in 19 days. So you can filter by this tab to see what's really going to be a long shot, basically, in terms of if these orders are going to work. And you can see a lot of these have pretty good algo scores and some decent premium here. So these would be some decent trades to look at. Whether or not you'd want to take them or not is up to you, but some of these can be pretty promising. So you have Apple calls, for example, bought on Friday, and with a strike of 545, and you can see it's conveniently placed for next week expiration. So the stock split happened on Monday, so they're probably expecting a rally to happen throughout that week, and to see if they could probably get in the money or close to it by their expiration. And if they do get in the money, they have so many contracts. I mean, these are going to be worth a lot. So you can see this algorithm also thinks it's a good trade. Has all 3 dots, which is what you want to see too, and a pretty good algo score. So that's definitely something to keep in mind here. And you can also filter it by sweeps. So basically a sweep is going to be when they wanted the order fast and they wanted it now. So they didn't really want to wait for price to change. They didn't want to try to get a better price. They didn't want to try to get a worse price. They just said, I want my full order and I want it filled now. So you'll see these are pretty people you could think of as eager to want to be in their position. And you'll see, like, if you look for this Apple one, it was a sweep. So they were very eager to get in it. They're very far. They have this week expiration, and they put a good amount of money behind it. I mean, just over, almost $500,000 here. So, that's something. If this was more expensive, I'd be even more inclined to take it. And there's a bunch of other filters you can look at here, like size opening sweeps and just pre-earning run-ups and stuff. So you can just kind of go by size lots, and it'll do it based on like the contract size, and then you can do new positions as well. So
can I quickly add one thing here?
Yeah.
So Noah was talking about how out of the money expirations that are possibly like near expiration, and the strike is out of the money. The reason why the strike price is really important in these situations is when you're buying 5 million worth of contracts or 2 million worth of contracts that expire this Friday, that's out of the money. Nobody else is going to be willing to buy them if they're wrong. Like for us, we can get filled on a contract either way because we're in small size. When you're in that big a size, you're not going to find a buyer to buy something that's probably going to be worthless on Friday, which means they want it so they can exercise the contract by the end of the week and get those shares for a cheaper price and take the profit from there, which is why we can use the strike price of these out of the money calls and puts that are expiring soon as potential price targets.
Okay. Yeah, and it's like you don't really know their intentions behind the option. I mean, you don't know if they're going to buy shares with it, if they're hedging another position. So, but what you can, kind of, hope is that, if you buy, calls and the stock gets above it, that's still like it's bullish in any sentiment as long as it's not a hedge. So, you're never really going to know the true intention, and you also don't know whether or not what they closed it early or whatnot. So this is kind of like you have to use it as like your own tool, but kind of figure out like what you're going to use it for, because it's not going to just give you a straight buy signal, to take trades. So it's kind of like you need to, I would almost, in a sense, think about it in terms of, hold on, do we have a, do you think smart money ever sweeps to build their hedge? I mean, probably. I mean, I don't, I mean, you'll never, I don't know like their exact process on how they're going to do it, but like if they're going to sweep, I mean, they have enough money to where they're not going to really care about, maybe not as much as if it's just a hedge or just a smaller position. Like if I would see like a $30,000 or $40,000, maybe like if their hedge price is, let's say if they're just hedging with $250,000 in their actual positions, 10 million, 5 million, whatever, they might not care as much. So, I mean, it's hard to tell again, like you don't know like why they swept it. I mean, probably just maybe it's faster, maybe it's easier, who knows for them, but usually a sweep is more, urgent. What was it even seeing the spot and strike prices? So the spot is just the price of the underlying when the order happens. So for example, when this person bought Netflix calls, they bought them when the stock was at 523, and their strike is the strike price of the call. So basically they anticipate that Netflix can be over or at 530 by 12/18/20. And the spot is important. I like the spot because when you're checking these trades, you can see, okay, they bought it here, they wanted it to go here. You can just search it up and you see exactly when they bought it and, the expiration. So you can see how well they're doing and how good the trade is going. And you can just sift through, hours of information to just see what trades work and what trades didn't. So another thing too is just looking at this dashboard, you can filter by ticker. So for example, if I want to check Netflix, this is all for Friday. So basically all Friday, this is all the positions that were open for Netflix. And you can see some pretty big ones here. I mean, you can see 9.8 million, 4.7. So these are pretty interesting. I am pretty bullish on Netflix myself. I mean, I think that Netflix hasn't had a run up in a while besides the recent run up. And Netflix's all-time high is 575. So you can see like right here at 575 strike price, they think they can get to all-time highs, and even all these in between are all going to hit if Netflix does get to 575 by their expiration or even close to it. Let's check. Yeah, I mean, I don't know too much about their hedging process. I mean, you don't even know if it's really a hedge in general. I mean, you can just assume. I mean, that's why I assume the ETFs are hedges, because you just see so many of them and it's just easy to just hedge against the market itself. So I wouldn't bet that any of these are hedges. Like, I don't even know what they would be hedges for. I mean, Roku, I mean, who knows? But I would say,
No, yeah, and that's the bulk of hedges are almost always market orders, like market ETFs, SPY, QQQ, that type of thing. People rarely hedge in terms of a stock itself unless upcoming earnings are coming in their longer position, which at that point they'll either sell or buy to hedge their positions to hold their earnings because they don't want to have to liquidate every time earnings comes around. So, but hedging is not the biggest concern. There's orders of 5 million, 10 million, 2 million are not hedges. People don't hedge in that size. Hedging is normally much smaller. It's those 100,000, 200,000 orders we see coming through all the time. So.
yeah, exactly. And that's why it's like, I wouldn't even worry about trying to take a trade by seeing the SPY tickers and stuff. I would just focus on straight equity orders, because it's just going to make your life a lot easier, and you're not going to have to worry about this SPY order. Like, I wouldn't even worry about that, because it's just, there's just too much going on. Just looking at more of the platform here, this is just their alpha, like AI bot, which is in beta, they say. And basically what it does, it just gives out longer short signals. A lot of them are right, some of them aren't. And they also don't tell you how long to hold it or anything. It's just their algo picks up whether they go long or short. And there's not that many per day, so you can see like 828. There's only 1, 2, 3, 4 of them. You see like Nvidia's one here. This was at 1129, so that was probably the run up. But yeah, so this is pretty cool. I mean, you could take these trades if you want and kind of just play around with it. So this is the Darkpool section over here. So basically, this is also same day. You're going to be able to see all of the Darkpool prints for the same day. So what you're going to have here is basically, like, for example, GE, like basically there's basically 350,000 shares transacted when GE was at this price, and for this, basically the nominal value of how much, it all costed. So these can be a little tricky because it's hard to really tell. I mean, you don't exactly know whether it's a buy or a sell, because obviously, or if it's bullish or bearish, because someone is buying and someone is selling these shares regardless of how it's distributed. But how the website, how Flow Algo recommends, using these is basically you want to look at the spot and the direction the stock goes in from this spot. So if the stock moves above or below this spot, will kind of give you an indication on whether this is bearish or bullish. So like, for example, if I was looking at GE, I would want to see, like, this print would make me look at GE and say, okay, is this an unusual print? Like, what's going on here? Is this something I should look at? And then maybe bring attention. You can also sort this by value too. So again, like, SPY is the most traded, so you're going to see a lot of those. But you could scroll until you see something interesting, like Netflix at 143 million. So basically you could see, like, based on how we filtered this by ticker earlier, we saw Netflix had a bunch of call sweeps, and we also see more Netflix in the dark pool too. So this kind of tells us that, people are buying Netflix, what's their look at in Netflix, and you can kind of see with this information that, people could expect Netflix to be going higher. So it's just kind of like using all of this information together and kind of like, in unity to figure out what's going to be good and what's not going to be good. And you might be wondering about these right here. So these are called signature prints, and basically these don't get reported until the next day, because you'll see like 251 is considered a signature number. There's other signature numbers like 503, I think, and just other ones. And these are usually the largest. But basically what this means is that yesterday, most likely bought SPY at this price point. And basically this dot on the side means whether the price is above or below this price intraday. So if this dot is red, this means that it's below this price. And you kind of want to see, you can use these to close, to see where the stock closes and where it opens to kind of get a gauge. And the reason these are reported the day after is because they actually route these signature orders overseas and they don't have to report them until today. So they specifically do that so that you don't have to see, you can't see in real time, you know, how much SPY they're trading. And these are only for ETFs. So you won't see signature prints on tickers themselves. So some other cool stuff is the snapshot. I don't think it'll work. Yeah, it won't work for today because obviously there's nothing. But what you can do is you can use this, you have it yesterday, this week, and last week, and you can also do this for equities, and it'll kind of show you the flow for the day. So if you think, like, again, we see Netflix here, right? So we saw the calls earlier, we saw the Darkpool print, so something's going on with Netflix. Chat. Roku flow. Yeah, so I mean, this gives us an all indication. I mean, we have 3 signs right here. We have the snapshot, we have the tickers before, and then we also have the Darkpool print. So something's going on with Netflix. I mean, there's really no, I mean, there was bullish subscriber news on Netflix, but I think, you know, Netflix could definitely go higher from where it is now because it has to at least test its all-time high, or should probably want to test its all-time high at some point, which means we're probably going to see, could see anywhere from a 30, 40, you know, point increase in the next few weeks. But anyway, what you'll see is you'll see all of these, you know, ranked from highest premium to lowest premium, and you can check individually all the orders here for it. So you can see on Roku, I mean, you see all these calls here, and if you want to compare it to the put side, I mean, you don't really see any Roku. So to me, that seems people are bullish on Roku, people are bullish on Netflix, you know, 2 streaming services that usually kind of go hand in hand. Same thing, Netflix on the call side, no Netflix on the bullish side, on the bearish side, I mean. So it kind of gives you an idea of like what's going on. And that's the thing is like SPYs, like you see SPY up here, like, oh, SPY tanking. I mean, you know, who really knows? But I would say this would be hedges, because if people are bullish on their other positions, they're going to want to have a bearish hedge. So that means, you know, there's a lot of SPY. Here, let me check the chart. What does this week's look like? Yeah, so this week, I mean, the weekly is going to give you, you know, even more stuff. So you're going to see Google at the top. There's only 9 orders because you're going to see there's going to be a massive order here somewhere, I think. Yeah, see 37 million here. So Google's at the top, and you have Netflix for the week as well. So this is just like really telling, and you wouldn't really be able to see all this. I mean, if you didn't have Flow Algo, you wouldn't be able to really get this kind of data and kind of see where the money's flowing. And here you can see it's clearly in Netflix. It's clearly in Tesla and Apple. Then you see Alibaba too, NVIDIA. So a lot of the tech sectors, a lot of the NASDAQ stocks are going up here. And then you have your Qs and your SPY basically leading the bullish or the bearish flow, probably hedges. I mean, I would assume so, because you don't see the Qs and the SPYs until down here, and definitely significantly less size. So let's see. Just checking all the Greeks important when scalping and swinging, or is that more for long-term investments? Yeah, no, I think it's more important for, I mean, I think it's important for both. I mean, I think you should be aware of your Greeks for sure. I mean, you know, I think more the Greeks correlates more to the strike prices too. So you kind of want to know what strike price you're going to buy, you know, just relative. So yeah, I mean, strike price, Greeks, those are all important. I mean, those are just all decisions you're going to have to make, which is why, you know, options traders are considered more intelligent than your average investor, because there's so much more that you have to dive into when you're trading options than if you're just trading equities. Because if you just buy an equity, you know, your strike price there's no strike price, there's no expiration, you don't have to be right by a certain time. You can just sit there and you can, you know, wait until you break even if you want to wait 10 years, whatever. So that's why looking at these option trades are a lot more interesting, because you can kind of see like, you know, why someone thought a certain process, or why somebody chose a strike price or chose something. Yeah, and you can check the equity too, but there's none for today. So if you want to check yesterday, you know, SPY again, you know, these are shares now. So you can see Netflix is still up here with all these other, you know, ETFs and just a bunch of sectors. If you want to check this week, you can also check here. You still see Netflix, you see Facebook, you know, you see Amazon and stuff. So this kind of gives you an idea of these shares. You can do this by date too, so you can check. You know, you can go all the way back, check any day, and if you want to go to the option side, you can also do this by date. You can't do this by week, but you can do it by individual day stuff. So let's see if we can do Friday here. Let's go for Friday. And here's Friday. So this was just Friday. Again, Netflix up here, Roku following it, and then you have Tesla. So you can look at the order size and see like there's a lot of orders for Roku, and they're kind of small. You have big orders for Tesla. So it's just kind of all, you know, relative to kind of what you want to see out of it. So the next thing is, contrary to like the dashboard, you're gonna have the historical flow here, which is just basically like the dashboard itself. You have all the dark pools and everything, but here you get to search basically by date. So if I want to see like all the orders from like August 1st, I can just click that, and I could see like maybe I want to see 300 orders and I wanted a minimum order premium. I could search that, and it'll show you. Sometimes it works, sometimes it doesn't. But yeah, anyway, it's supposed to show you, you know, basically. Let's see if I can get. Yeah, so basically from 8/1 to 8/18 and stuff. So I can see like these from 8/17. Yeah, sometimes it doesn't work, but that's the goal. You're supposed to be able to, you know, search stuff. And if you want to see stuff from yesterday, or if you just want to look at a ticker itself, like if you want to check Netflix, for example, just put the end date here. Search. You'll be able to see all of Netflix's flow. So basically see how we're at 8/3 all the way down here, and you can kind of get all the way up to 8/27, and that doesn't show the end date because that's for today. But yeah, so basically you can check and see like what people were thinking about Netflix, and you kind of sort that by premium, and you can see like on 8/20 there's 26 million of Netflix at 496, and then now you know Netflix is around like 540, whatever it is, 550 or 520, whatever Netflix is at now. So you can see that this call option, you know, made a ton of money. Same thing with this one. They bought it when Netflix is at 492 on 8/21. They bought this one, you know, at 8/27, so after the rally probably. So, you know, these trades right here were definitely much more educated. I mean, 23 and 26 million is a lot. So they actually ended up being both right by a lot too, because they have 500 and 495 strikes. So they're probably 30, 40 points in the money on 5,000, you know, almost 6,000 contracts each. So they probably almost doubled their money, or tripled it almost. So that's pretty cool. And next, how I kind of see is the levels. So basically, this is really cool. You can see the volume traded at each of these price levels. So these are only significant price levels with enough, you know, money flow to even make it, you know, relevant to be on here. And the strength is what you want to look at, basically how strong the level is itself. So when we're looking at SPY here, you can see that 297 has $17 billion of money flow, 58 million shares, and 100 for the strength. So when just looking at this, you could assume if we were ever to test SPY 297 again, we would probably bounce off of it. And if we test SPY 321, we'd probably bounce off of it. So you'd probably bounce off of any of these levels, which are basically just support and resistance levels that you can physically see how much, you know, money is traded at each of these levels. You can do this for any ticker as well. If you want to check Netflix, just kind of using that as our example for the day, you can see that at 498 is a huge level for Netflix. 531, huge level for Netflix. So you can see, you know, if we ever touch, you know, have to get down, have a pullback or something that we want to look at, we can see, okay, 531, there's a bunch of orders probably still sitting here that are going to, you know, push this thing up. We could probably bounce off of that. Check, see Tesla. Again, I mean, sometimes, you know, Tesla's been moving so fast, so it hasn't had a lot of time to, you know, get a price level together. But, you know, you can see around this 1,000 level, there's resistance, you know, 600 level. You can see all these levels, you know, even 243. If we're ever to even try to get back down to 243, you know, you could probably see a bounce there. Like EA, you can do this for any stock. So you could just check and see like 178. You can see that there's a lot of strength here as well, and just money. And what the closest levels means is that this is the closest level relative to where BA stock is right now. So if we're below 175, I mean, it's not that strong of a level. So you could probably assume if we test, you know, 178 or, you know, even to the upside or downside, we can either bounce or reject off of this. So it's just a good tool to just kind of see. You can filter it too by strength and all that kind of stuff. So you got the date as well. So it's just kind of cool to see, like, if you're going to do your TA, you're going to do analysis, you can see what is really going to, you know, if your analysis is correct, like, oh, is my level strong enough, or do I have, you know, what I want to see, and it just helps confirm it as well. Just go through these pretty quickly. The radar, again, is basically like Darkpool prints, but like a radar for them. You can do this by any so Netflix in the last 30 days, you can see that, you know, there's massive shares being bought in here in like blocks. So just on 827, you know, you have 15% of the average volume. You know, almost $1 billion. You have $1 billion on 825, and you have, you know, not much action. You know, the last few actions, 810, 87. So you can see this doesn't happen too often. So you can do this for any stock, and you can kind of see, like, with all the data that we have so far on Netflix, using the calls, using the historical flow, using the snapshot, using the radar here, you can see that there's tons of Netflix being traded. So, and even just looking at the chart in the last week, you know, Netflix is already on its way up, and it still has an all-time high to test. I mean, Roku just tested its all-time high. NVIDIA is testing its all-time highs. Apple's testing its all-time high. All these tech stocks are testing their all-time highs, and Netflix is one of those that hasn't really done that yet. So I think that's also why this rally is being fueled, because, you know, there's subscriber news coming out and all that kind of stuff. Here's unusual volume. Basically, this will show you, you know, basically options with the most calls and puts, you know, unusually flowing in and out, basically. So you can see that for Walmart, you know, the put to call ratio is insane. I mean, there's 453,000 to 58, and you can see this, basically the volume, total volume here is these two added together. And you might ask yourself, like, why, you know, why Walmart might be up here, and it's just simple. I mean, the TikTok news about them and Microsoft, you know, is creating interest. You know, before there was not this much, you know, this many calls putting into Walmart, but this, you know, blog out picked it up as unusual volume, and it's true. I mean, it's definitely unusual for Netflix to have this much of a call to put ratio. So, you know, it's definitely something to look at. Same thing with NVIDIA. You know, you see that in Roku, it's 2-week highs, you know, for all these here. You can just tons of data that you could just sift through to kind of make these decisions. And again, this is all stuff that you would not be able to see just without this. I mean, there's just no, you know, I mean, the platform's $150 a month, but it's definitely something that if you can use it to your advantage, you can definitely pay for itself. I mean, for sure. I mean, you could just look for one trade a month that could even pay for it, and, you know, it could be worth it. Top open interest changes, same thing. So similar which is live. Okay. Yeah. I mean, there's not many good videos on it, so this would be, but yeah, call to put ratios. Again, here, kind of, you know, seeing what the top open interest changes are, so you can see like who's coming in and out of what. So if you want to do it by like top change here, so you can see like even though it's green, it's a put. So people are adding puts to the AT&T. I think that's their symbol. So you can see like people added 47,000, you know, puts and added calls here. So just another thing to look at. You can do it by expiry. You can do it by symbols. You can see American Airlines. I don't really use this too much. I mean, I don't know honestly how to use it that well, but it's there. And yeah, so that's a good amount of the features. You also have this chart too. Yeah, I'm almost done. You have this chart here too. So if you want to just, you know, if Thinkorswim goes down and you want to look at the charts and stuff, you can do all this stuff. There's plenty of information here. You can search any ticker you want. You get that chart, and then there's this Learn tab, which I think is pretty cool. They have a bunch of stuff. They haven't finished all these, but if you want, you can look at, you know, basically the Darkpool insights. They have all this information and signature prints and all this kind of stuff. So there's plenty of stuff to learn. Yeah, so I think that's pretty much it for me. I mean, you know, this is probably one of the best ways, I think, you know, to be able to track, you know, the smart money movements. I mean, there's no other real way to do it. I mean, you have to have some sort of information database like this in order to kind of understand, or you're gonna, you know, not have that edge. So I think anyone that really does have this has some sort of an edge. But yeah, that's pretty much it. I'll check. Give this over to Jay. He's gonna do his presentation.
Okay, so while he transfers everything over to me, since he focused on flow algo, I'm going to start with swing trading and how we can find these plays and use flow to confirm them, or on the technical side, confirm what we're seeing using primarily flow. So let's see.
You got it.
Okay. Yeah, I'm going to start showing my screen now. Okay. Let's see. Okay, can you guys see my screen? Just someone tell me if you can.
Yeah.
Okay. Let's hopefully this is open. Yes, it is. Okay. Okay. Okay, so let me reopen Zoom. Okay. 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 Okay, so let's get started. So first of all, let's okay. So this is my swing trading setup. What I'm watching generally on these is I'm always price action based, first of all. So I'm looking for price action patterns. But the problem with price action is when you're watching 50, 100 stocks, unless you have the whole day, there's no way you can find setups without manually checking each chart if you're solely focusing on price action. But on the other hand, if you create proper tools, scanners, stuff like flow algo, stuff like the things that Thinkorswim lets you build, all that type of stuff, you can find so many plays easier compared to when you're not. So here's an example. So on this, you can see that Apple right now has a 1 hour squeeze, but I only know that because I'm looking at the chart. So I'll explain how the squeeze indicator works really quickly before let me open the chat. I cannot see the chat. That's weird. Yeah, I can't. I can't see the chat, so if Noah or someone can just tell me if anything's written in there for me to answer, I'd be happy to answer any questions. So TTM squeeze basically looks for the Keltner channels to be pulled like contracting inside the Bollinger Bands, which all that means in price action terms is price is squeezing. Price is becoming consolidating in a range. Price isn't moving as much. It's not making strong moves in either direction. So when the conditions are met for squeeze, what you'll see is it'll create red dots here. And as it releases, the dots come green. So if you take the indicator itself, it probably has a 50% win rate just trading off of the breakouts from the indicator. When you combine it with price action, you can find really, really good plays. So on that side, what I look for is I look for the stochastics crossing upwards, a squeeze being releasing, volume, and a price action pattern. And the stock to be above moving averages, but I don't have my moving averages on here right now. Okay, so the 9. So the price to be above the 9 moving average. I think this is a 9, right? Yeah, the 9 and 21. So on the left side, if you look, I have a squeeze daily column, a squeeze 4-hour column, a squeeze 1-hour column, and just a momentum column. So we'll talk about this one after. So on this, I put in all the stocks that I'm interested in trading. So my list is about 100, 120 long. It's different sectors, retail, all types of things, plus like everything I scalp, all of that stuff put in. So for example, all my swing trades come off the 1 and 4-hour and daily charts. So we'll start with the 1 hour since that's what I'm looking at on Apple. So you can see is if you look, let's find Apple on this. Where's Apple? Apple. So Apple is in a 5-period squeeze. So this is what the yellow, I'll talk about the colors now. So the yellow color represents that the stock is in a squeeze on that time frame right now. So Apple is in a 5-period squeeze on Apple right now, which I have this on extended hours off, but you have 1, 2, 3, 4, 5. With extended hours, you have 7. Without, you have 5. So this basically represents the Apple squeezing. So we see that, and we see that Apple's in for the 4 hours in a 9-period squeeze. So let me go here to this chart. We have an even bigger squeeze on the 4-hour time frame. What this is telling me is when Apple breaks, it's going to have a nice run. We're having a squeeze on multi-time frames, first of all, and we're looking for a good play now to the upside. So now let me show you guys the squeeze I released. So this is telling me Qualcomm had a 4-hour squeeze, and it's 1 period into being released. Let's look at that. Qualcomm. So this is the type of trade I'm looking to take. It's squeezed for multiple periods. We get this squeeze pattern up here on the 4-hour, and we get a breakout. The reason why this one is, Noah, can you tell me, can you see which one I'm pointing to on the grid on the left?
Yeah, QCOM.
Okay, good. So so Qualcomm, the reason why it's bright green is because it says ML, which I coded it, so it says means momentum long. The reason why it's showing me that is in the last 2 periods it had a breakout bar, which is this big green bar breaking out. So when I'm glancing at the grid on the side, what I can automatically see is we're having 2 time frames have a squeeze releasing, and we're seeing that on the 4-hour there's a clear sign of momentum recently breaking out. So if I'm not swinging at the moment because of other problems and trying to get good at scalping, but if I was swinging, this is a trade I'd definitely be looking to take. Qualcomm's pushing to new highs. Stochastics are crossing over. It's above the moving average. The only concern here is we didn't get a volume spike, but volume should follow this soon into Monday. So let's look at for a few other setups that are momentum plays. NVIDIA. So NVIDIA is showing me at the end of the day, and this is real time. This isn't just after the market closes. This works real time. NVIDIA comes out of a squeeze on the 4-hour. It's releasing, and it shows a clear momentum bar right here. And this one, both of these are momentum bars. So that's an example for these. So let's look at gold, which is light green. So, all right, so let me, before I keep talking about the charts and showing you guys, let me just explain how the coloring fully works. So yellow means it's in a squeeze. Bright green means it has momentum and it's near the high of day. The number next to this is the percent from high or low of day based on the direction of the squeeze release. So this means that Qualcomm was in 2% of the high of day at market close. And for example, NVIDIA was 0.04% from the high of day. It was literally rallying into the close. So the reason why this is so important to me is that the majority of runners, a majority of plays that are going to give you a gap up need strong momentum into the close, need to be near their highs. So I look for that. So if we look at this one, okay, so here's EA. I actually look for the chart for this one. So red means it's releasing to the downside. MS means momentum short, ML means momentum long. Next to it, if it's not yellow, it's the amount of period since the squeeze was fired. So these squeezes fired just one period ago. So for example, look at EA on the 1 year daily chart. So here what we're seeing is squeeze is finally releasing because it hasn't been making strong moves. It had a 1 period squeeze and it's releasing. I don't like this too much because the squeeze was only a singular period, but it's pushing to the downside. It's red because it has momentum, but it's not bright red because it's not close to the low of day. I don't think there's anything bright red right now, but okay. So does anyone have any questions up to this point on how to use this? Because this is much easier than a scanner and it's real time. It updates on its own on the side of your screen. You can find day trades off of this. You can find swing trades off of this. I know guys that day trade solely off of this. We'll look for squeezes releasing on the 1 and 4 hour and trade them. So does anyone have any questions right now? Before I keep going on this.
Wait, what's the so what's the S4H? Oh, squeeze 4 hours, squeeze 1 hour.
Squeeze 4 hours, squeeze 1 hour, and squeeze daily, yes.
Those are for the time frames.
Yeah, different time frames. And then on the right is momentum. So this looks for 10. So actually, I'll just show the code for this one. Okay. So this just looks for a candle that's bigger than average in size, and that's within 30% of the high for long. And it looks for the same thing on the short side. It looks for a candle bigger than average, and it looks for a candle that's closing near its low. That's what momentum is gauged at. So that's how you use this in general. The dark green and dark red are plays where the squeeze is releasing, but there's no momentum and it's not closing near the high or low of day, which means it's a potential play. For example, we'll look at INTC on the daily. INTC 4 hour.
Yeah, you
So
can't
we
really,
get
you can't
what
really,
happened?
can you?
So you should be looking for a yellow or green. So what you want to be looking for scalping, I wouldn't use this too much. For day trading, what I would suggest, I was telling my brother about how to use this for day trading. What you're looking for is not really daily. Dailies might take too long or fake you out, but on the 1 hour and 4 hour, you're looking for something like, for example, if you see previous night you're planning, so you see that EA is in a 12 period squeeze on the 4 hour time frame. What you would be looking for here is you would say, okay, I will trade EA short below here and long above the top of the range. My target's here and my target's the high of the range, so that type of thing. So this is mainly so you can find these plays and you can take them as they break major ranges and scalp it or day trade it. I would suggest you scalp a part, you day trade a part. If it's green, what happens is, for example, so Snap had a run up yesterday. That's what this is telling me on Friday. Snap pushed into the close. So what this means for me is this can make a potential continuation play for a day trade. It's releasing recently. It's in a 9 period squeeze and it showed momentum today. This is what I really like for a day trade. It's in a daily squeeze. It's been in a range for a while and it's finally showing major momentum, which is what this is telling me, into the close. So what I'd be doing is I'd be watching for this to break out of this area and play along up over in the 22.4, 22.6 area. So that's what this basically means in terms of the breakouts. So I would stick to this 90% for swinging, but if you're a day trader, you can find a lot of good plays using this, but I wouldn't suggest you have as many stocks as I have. You would want to have a focus list. For example, I'd go to my scalp list. So now you know what you're looking at. So on this, you can quickly say, okay, BA is in a 1 period squeeze on the daily, Apple, AMD is in a 1 period squeeze on the daily, Apple's in a huge squeeze, I can watch that. You would know that NVIDIA has momentum already. It could be a continuation play for the next day, that type of thing. But the key is you want to be looking for stuff that's yellow or first period green on a time frame and play those. If you want to play the pullback, you can play first period greens. For example, you can play NVIDIA on a pullback on Monday. You could wait for NVIDIA to pull back a little bit to the 520 area, and as it dips, you buy it. And this last column is just saying there's momentum. So Roku is not releasing from anything. Roku's been running. It's been running now for 4 days, but this is telling me there's still momentum into the close. So this makes it a potential watch, especially for scalpers. I'm looking for anything with momentum for scalping. So is there any other questions about this and how you use this? I'll be sharing the code with everybody who was on the webinar and all the active and proficient, that group after this. So if you're not active and proficient and you're on the webinar, just like DM me so I make sure I share it with you also.
So if it has nothing, then that's like no trade.
If it's blank, what it basically means is there's no recent squeeze release and there's no squeeze going on right now. But the reason why I added this last column is because a lot of the time you get things like Roku that have been running for 2-3 days, which could potentially make good continuation plays, but have already fully released their squeeze. For example, a lot of people, I know that Nor Trades played Roku breaking out from here, from this range as the squeeze is releasing, which is why I say the first period release is really important. So that's why if you're a day trader, you plan the night before. You look at this, and back then Roku was in a 16, 15 period squeeze on the 4-hour chart. You would have seen that, and you would have set alerts, and you would have been like, okay, if it breaks this point, I'm taking it long. If it breaks this point, I'm taking it short. That type of thing. So
What determines a period?
what determines, like, what do you mean the period? Like the number
Like,
here, the yellow number?
Like what, how does it get 1 period or 2 periods? Like how does it stay in the period? Because it has to fit a certain criteria, right?
Yeah, so basically a squeeze is whenever, I don't want to put all the indicators on, but the definition of the way TTM squeeze works is it looks for the Keltner channels to be contracting inside the Bollinger Bands, which represents a momentum squeeze and price action squeeze. So it's the combination of 2 different indicators, and then the code counts how many periods that criteria has been met for. It's really long, so I don't want to explain how this works right now, but it basically, I wrote this, so it basically makes sure that like we check it's been contracting for a certain period of time. And it puts it here so it's quickly accessible. This is just, instead of you having to look at a chart and be like, okay, it broke out here. Here's the pattern. This tells you this is a potential play, this is a squeeze, this could possibly release, that type of thing. So it makes it much quicker. So any other questions? Because I want to go over one other thing. I think I'll save the tape examples for next time, unless if you guys want me to do the tape examples now, write it in the chat. If not, I'm going to go over dip buying using the same system. So just write in the chat really quickly which one you guys want to do, because I don't want to run too late. So okay, yeah, then I'll go through the dip buying stuff. Okay, so we'll start on the daily ones. This is a little easier to explain, but this is really good, especially if you have a portfolio. This is really good, especially for investing. So you look to add. I know a guy who trades a multi-million-dollar portfolio doing just this. He'll add on dips, and this just tells you where to add. So for example, I'm gonna put in. I'll just use my scalp list for this, I guess. Let me see if there's anything good on there. Okay, we only have one, so I guess I'll use my full list. Okay, so we'll start with daily. So UNH. See. So basically what this is telling you is on the daily, this pulled back hard and now it's bouncing back. And you're looking to get long off support. So all you have to do is when this tells you this is a possible play, you just have to look for entries. Wait, I need to fix one thing on this. This is messing something up. Give me a second. Okay, never mind. I'm not doing this now. Okay. So let's look at XOM. What this is telling you, the color's messed up, but I need to fix the coloring. But you see how this says E-bounce? This means that it's an early bounce. It's a bounce happening, but it hasn't confirmed, meaning it hasn't broke the moving average yet. If it says C-bounce, that means it's confirmed a bounce and it's broke the moving average, confirming momentum back to the upside. So if you look at Walmart on the daily, the reason why this is showing up as bounce is because it took a major dip intraday and now it's coming back. So that's why it shows either setups like this or it shows longer period bounces. Now we'll look at Target. Target has a dip buy on both 4-hour and 1 hour. So on the 1 hour, you're getting a pullback to support, and now it's starting to bounce and pulling back over the moving average. The reason why it shows up is because this green candle shows momentum finally popping up. And if you do it on the 4 hours, it'll look like the same thing. What else? WM and Amazon. Oh, I didn't know Amazon had one. Okay, let's look at Amazon. Amazon on the 1 hour. Okay. So basically what's happening here is Amazon's pulling up and it's holding support. So that's what this is telling you. You could possibly add, if I was doing this without using this grid, my add area would be this area for adding at support, looking for a strong move. So the key here is my thing only allows stocks which are above their 200-day moving average, 200-period moving average, which is long-term uptrend. If not, I wouldn't suggest it buying because it's just not as strong a strategy to buy something that's not in a long-term uptrend. But what you're seeing is this repetitively can show you possible plays to either side. Okay, so we'll look at another one. We'll do a few more. So Facebook. So Facebook, same exact thing. You're getting a pullback, momentum's confirming, and starting to push to the upside. Let's see. So these are easier to explain, but these setups are really, really good, especially if you're trading stocks. With options, they work, just not as well because I don't know how long it will take for this to bounce back. I know that it will bounce back, but I don't know how long. Let's look at Visa. So Visa, same thing. You're getting a, I can't zoom out. Okay. So you're getting a pullback to support and it's bouncing again. So these are looking for bounces off support repetitively. And this can find you a lot of good plays, especially if you want to add into long-term positions. So for example, if I was looking to buy Amazon up for another leg up, this would definitely be my add point. This would be my first add point. Stop out below the low. And this gives you really good risk reward because your target is the highs. And your stop loss is right like a few dollars below your stops. My next add point would be down here. And this basically just tells you if possibly could be in one of these areas right now. And you added these points looking for legs up. For example, I'll give you guys a trade I took off of this, but didn't hold. So my dip buy thing went off here as Apple dipped down this day with the gap down. And I added here, and as it came down, I added again, but I sold at the top of the range. I was trading shares. So I missed the whole move up. I wasn't expecting it to make such a big move up, but it did. So that's the power of just buying and holding. The problem is with options, it takes, you don't know the time frame. I don't know if this is going to take a day, 2 weeks, 5 weeks to break out. But with stocks, you just buy and hold with your stop loss at the lower area. So I think that's it for me for today. If anybody has any other questions, let me know. Write them in the chat or unmute yourself and just ask. So I think I'm gonna. Emiliano, Noah, do you guys have anything to add?
Nothing particular.
I don't see anybody going. Would you go over WKHS?
WKHS in terms of the tape. Oh, okay, yeah. Let's see your J. Okay, I'll go over that one really quickly. Let me get this on demand. Let me check the date you gave me again. Okay. Okay, so I think this is loading. Once this loads, I'll go over. Let me get the date that you sent me. You put 6:36 for the entry. Is that 9:36 on the 14th? Is this the right graph? Can you tell me if this is the right one? I'm waiting for it to load. In the meanwhile, okay. So you went long. Let's see. I'm waiting for this to load. Give it a second. loading for me really quickly earlier, but not now, so. Okay. Okay, it was puts, okay. So you were looking, let me look at the context of this. Did WKHS have any news this day? Okay. I think my Thinkorswim froze. That is weird. Yeah, practically froze. Okay, so I'm gonna have to restart my Zoom. So if there's any other questions at the moment. Yeah, it really froze just. Okay, it was a sector play. Okay. Oh, so I'll just quickly explain this as I open my software. So the way that you add the code for those other things, those two, is you have to go on your watch list, create a custom column, and then you select the study. And from there, it should let you put in the code that I'm going to send as a Google. I'll send it probably as like a text file to everyone in here. Is there anyone in here who's not active, like marked as active in the group, so that I know to send it to them individually? If you want to tell me like on the chat, like as soon as you can. Okay, let me share my screen. It's not related to the webinar, but you should be looking at different time frames. So yeah, you should definitely be looking at different time frames the whole time. You should, for me personally, what I do is I start from the daily, go down to the 1 hour and 15 minute for my key levels, and intraday I'll set a few other levels when I'm watching. It's the 14th. I'll start at 9:34. Okay, so I guess I'm pretty sure that this is the clip. It's loading again. Can you guys see my screen with the? No, can you tell me if you can see the screen with WKHS?
Yeah, I can see it.
Okay, good. Okay, so I'm gonna play this clip. So this is August 14, 9:34. We're looking for a low of day break. Let's see. Okay. So the break is near 9:36. But till then, let me explain what I think on the bigger level. So this is what a lot of people lost money playing Tesla when it looked like this. What's happening is that this is in a major range. It's not directional. You're stuck in a non-directional area. So sure, there could be a move between the previous day's low of day support. But what happens is in these areas, these more likely, it's much more likely that you don't get good plays to the breakout side either way it goes. Okay, let's go back. So now we're gonna watch this. So that's my perspective on this in a larger context, and then now we'll watch the tape. Time and sales not loading again. Okay, so we're getting it. Okay. So there's huge buyers, first of all. If you just saw on the left side, I just saw 54 and something, 54 and 14 over here. Let's see if it comes back up. So we're approaching 15.2. That's about the breakout level that we're looking for. And that's a significant, I would consider that significant for WKHS, which is a cheaper stock. So let's see. So far the tape is just showing me that there's aggressive buyers on the left side Sellers not so much, but you can see that there's sellers still hitting this down to a certain point. The tape is printing mostly on the bid. So first of all, in terms, let me pause this really quickly. In terms of the context, yeah. So I caught what I want to show you guys, two things here. So first of all, you have huge bodies of 1521, 1521, 1520, which is what it's telling me is there's people looking to get out at this point. Sorry, people looking to accumulate shares at this point, which means that it's likely to move back up. When you see huge buyers like this is much larger than you see anywhere else on the tape at the moment. But it's also printing aggressively on the bid, meaning the price is getting pushed down. People are selling, people are trying to get out of their positions. But on the technical standpoint, what tells me that this trade is not a trade I would take, especially this close to the open, is your straight 3 bars going down, which means, let me see if I can get the writing tool. Annotate. Okay. So what this tells me is that this is the, let's say that this is the low day point. We got to move up, and now we're coming back down. I would expect to see something like this when we come down and then consolidate at the low and then break for a good move down. But instead what we're seeing, we're gonna pop up and we're getting a straight move down, which means that what normally happens is if you watch Amazon, Tesla, any of these stocks, when you get something like this, you'll get a pop back up to the level. And it happens a lot. What I'd rather do to be safe on this type of play, especially without a strong catalyst pushing this down to a major level break, like for example, a break below this area is a major level. That's a different story. But when we see something like this, what I'd rather see is a breakdown, a retest, and get short as it pushes back. And then we should get a nice move down. I'll clear that. Let's keep watching. And on this side, what you see is we have a buyer of 76 and 13. These are relatively big buyers, especially 76. That's a very, very big size order coming through a 1521. So what might happen is two things. I haven't watched this tape clip. If it pops through and the bid isn't printing heavily, what that means is that someone pulled the bid, which means that it's likely a fake out. When bid pulls happen, what happens is the price just falls through and buyers below will aggressively buy it up. If this gets tested a few times and breaks out, then it might be a healthier breakout. So I'm going to play this clip now. Okay. So that order gets smaller and it pops, okay. Now I'm looking for a little bit of a hold. We get a pop again. The tape is kind of laggy here, that's the other problem. Let's see. What's happening now is my biggest problem with this is it's 4 bars down and this is climatic breakout. This is people that's finally just getting out of this. It's already down a lot. So I want to see a pullback and see it hold below the level. But even if I got into this, what happened is even if I got into this, I would be able to get out break even because I'd be looking to get in. So let's go back a minute on this clip. I want to look for two things specifically. So what we're looking for, I think everybody should look for this on this clip specifically. What we're looking for is, number one, it bounced off 1515. See if there's aggressive buyers as it's coming down. We should only see aggressive buyers at the low of day level, not below it, which is the first disturbing thing about this. The low of day is at 1522, but there's aggressive buyers at 1521, which is right below. The second thing that we see that's not good is the extended move down. So let's watch this one more time. So what happens is there's definitely aggressive sellers pushing this down just based on how the price pops. It's pushing 1521. You get those huge orders. You get 39, then it pops. And then you get a huge buyer at 1517. And at 1519, you're getting some buying pressure. The selling side isn't as stacked. It's not able to hold stacked. We're seeing a little bit of selling pressure at 1518, 1521. But we're not seeing as much as we're seeing buying pressure. This area is not working. So that is weird. This isn't a bad breakout overall, but the problem with this is if you try to get in at the bottom 3 bars down, you'll likely get spiked out. That's why I would say you could take a riskier play just getting in at as it breaks. But the second it's coming back out, you should be out of this trade. This happens all the time. If it's coming back down, you just get out and you look for a re-entry. This isn't necessarily bad in terms of the tape. There's nothing here that I would say that makes this a bad trade on the tape. There's still aggressive buying and selling pressure, and there is definitely strong buyers. But this would probably be a much better play if it wasn't already 4 bars down coming down into this. like even if you were in this play, I don't think you would have taken. I don't know how WKH's premiums work, but you shouldn't have taken a massive loss unless you were buying in right at the bottom. If you got in right as it was touching 1520, 1520, 1521, as it broke the low of day, you should be fine. But let's just see what happens a few boys later. I don't know what happens on this one, so. Okay, so you get a full bounce back. So what happens is this type of fake out happens all the time. The wick fakes you out, you get in, but you should be out the second it doesn't close below. You take a small loss, you keep going. This happened to me on Monday, I think on MSFT. Let me see. Okay, let me get off on demand. This type of example happens all the time on all types of stocks. So on MSFT, what happened was I saw this original thing. I got it as it pushed. I sold, I got in right here as it broke out. I sold some up here. And the second I see that it pushes up and it fails one more time, I'm out. That's the same concept that when you're getting in the first time. So I think Tesla has a really good example of this a few days back. Let's see. This day, yes. What happens is we get our first strong move up. We get a breakout, strong move up. You get faked out. If you were trying to get in and out of this and get in early, you would have got faked out on this wick, you would have got faked out on this wick, and you would have been right on this last wick. But you would have had to take a lot of fake outs on this. Yeah, if you hold these types of fake outs, you take huge losses. Even like the small wick, if you don't get out just as it pushes back down, you take a loss. But the key is seeing when the tape almost always will speed up as it continues, but you should see momentum continuing. You should see the tape running throughout the period, and you should see that there's buyers stacking up. On WKHS, the most disturbing thing is that there's no sellers aggressively stacking up. You should be, if this was a real short play, you would see sellers of the same size you saw buyers at the low. You'd see sellers at 40, 50 stacking at that level to hold it down. So you get faked out here. So I got out break even on this. I got in, got out break even. And then my next entry was as the tape sped up and I saw volume picking up as it pushed, I got it. And then I caught like part of the rally up. I got out about here. So the key is these happen a lot. You cannot have like a 90% win rate scalping unless you're taking only plays way after confirmation, which means you miss a lot. But the key is you execute on your way out quickly. But right before we wrap up, last example here. So this is an example where I took a big loss for no reason. This happens. We're down already. The correct entry here would be as this level breaks, the 2260, the 20, like this support area, I would say about 2268, 2270, I would say mainly. This is what you're looking to break with strength. So what happened is I was doing well on the day, but then I saw this push down, and I got it right about here. The mistake is the correct entry is over here. So you want to be looking to get in as aggressively as possible. So that's it for this part. So. You guys have anything to add? That's it for me, so.
Yeah, we should probably end it so it's not.
I think that was a pretty good explanation. Okay. Does anybody else have any questions?
Emiliano, you're now host. I made you host.
Mm-hmm. Okay. I think that today's webinar has been.
I guess he might not be at his computer right now. So that's it for this time. Thank you guys.
Wait. Can you not hear me? Can you hear me?
Yeah.
Oh, okay. I was talking. I'm like, whoa.
Okay, mine is
All
not
right.
working. That's weird. I can't hear anything. Never mind.
Yeah. Okay. All right. So I believe that today's webinar has been pretty long, and we have gone through a lot of information. Does anybody have any specific stock questions they would like me to go over? And if not, we'll go ahead and end it from there. I'm just going to go over possible plays or something like that if you guys want me to. But if not, we did take a lot of time here. I'm pretty sure that you guys need some time to even, kind of digest all the information that we got from Noah and Jay. So it's up to you guys. What do you guys want to see? Meantime, I'm going to be preparing all this. Okay. All right. So within the weekend, we will be, I mean, I do have a couple of announcements specifically made for the group. Now, as each month is ending, I will be interviewing all of the people with the most activity within their groups. And if you're not in a group yet, make sure you are, because we are going to be coaching you guys one-on-one, or at least I am. So make sure that if you're not in a group, get in a group. If you're not in the proficient and active chat, be proficient, be active, and you'll be the first ones to see this recording. So in that sense, you guys, I think we'll leave it at an end right there. And I hope everybody has a good day. All right. All right, y'all. You guys have a good one. All right.
All right.
Take care.